Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from Chartsandmarkets.com runs down the major markets. It's notable new record highs were not set this week. He points out the gold-silver ratio has been correcting favorably, and uranium has been a very positive investment. He also checks out crude and the U.S. and Canadian dollars. Founder of the Schachter.Energy report, Josef Schachter drills deep into the energy sector. He says Canada has to do more to promote LNG with Asia because it's begging for more energy from reliable sources. He also talks about Alberta separatism and what could help quiet it down. WeissRatings.com senior editor Sean Brodrick talks to us from Florida to discuss what could be hot investments in a world that's teetering on war. He comments on crude, silver, gold, lithium, and copper. We'll talk to Ross Clark right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from Chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on X at Charts by Ross. Welcome back to the show.
It's always good to be with you, Jim.
Ross, what happened on the stock markets this week? Well,
let me see. Does anybody know that we didn't hit all-time highs in the NASDAQ and the S&P this week? I'll tell you. 2 weeks ago, we were up challenging the highs, and most of the indices were showing bearish divergences as far as the RSI was concerned, the Relative Strength Index. And the key, once you got that in place, is to see how you do on the pullbacks. And in this case, the short-term moving average that we look at is a 20-day exponential, and it's been holding it really well. I guess we've had 3 times now since that April bottom, and the market made that fantastic turn. But each one of the corrections has held on the 20-day, and we did that as of Monday morning this week. And then have made a great 4-day run to new all-time highs. And we look at the credit side of the equation. If you look at the high yield market, you're seeing that move. The HYG is moving to all-time multi-year highs. We look at the global M2, that's the money supply, and it is increasing. We're once again at all-time highs, and that tends to be a leading indicator to the market. When there is new money and lots of it flowing into the system worldwide, it looks for homes to go to. The equity market and the Bitcoin market have truly been those that have benefited from that. Take a look also at the on the St. Louis Fed. The numbers there show that the CCC, so that's the low rate bonds, that the option adjusted spread there, which had peaked in right at the April 7th top for credit wariness, which was the bottom of the equity market. Well, that spread has continued to ease off this week. We're at new lows for the move, so that's positive for the market. And when you look at the silver-gold ratio, that one tends to be an indicator of what's going on in the financials. And when you see it moving in favor of silver, as it has been, that tends to be good, especially for the financials. And the financials, if you take a look at the XLF or the individual stocks out there, they are doing exceptionally well on the upside. So until we see some reasons for concern on the credit side of the equation, I think this thing just continues to step its way up. The 17-year cycle topped in February. Typically, you have a secondary high months later, so we're going to be watching for that one. And the 20-day and then the 50-day moving average has become the key supports to look for. So as we move through the summer, let's see how those things behave. Right now, the key support on the S&P would be just around 5,900, and the index is sitting at 6,160. So there's lots of room for just some volatility as this thing is walking its way up.
What's going on with crude?
Crude oil, well, clearly had that big bounce when it came to the American move on the uranium facilities. And so here we've punched up to 76. We did that twice and back down to 65 at this point. We're in what we had looked for as a seasonally bullish period. Never thought it would have the kind of magnitude that this one did. At this point, this support looks as though it wants to hold. But as we mentioned last week, this is really was a binary trade, depending upon what the retaliation was from the Iranians and what was going on. It's just not a trade that is, I think, worth taking the risk on. The stocks have been doing all right. If you take a look at the XLE or the XEG on the Canadian side, they bounced up nicely with the oil market, have held probably half of those gains, and clearly you want to see that things continue here with this upside bias.
What's going on with gold?
Gold is under pressure, and when we take a look back at the movements in gold after times of crisis. So when, in this case, the move by the Americans and the bombing in Iran was clearly setting up for a top in the gold market. That was, we got that 2-day push to just over 3,400. It couldn't hold that, and we're easing back down. We're at 3,280 as of this point on Friday. And typically, you'd want to see, after a move that brings a lot of the sideline people back into the market on the upside, once that move has run its course, you see a good correction. The 200-day moving average becomes a possibility, and that's down around 2,900. And when we looked at what's going on with the gold and the U.S. dollar, when the U.S. dollar had that spike down in April, that was the top of the gold market. And then the secondary high here has been with a little uptick in the dollar index, but the dollar is now continuing down and gold going down with it. That's the same type of thing that we saw back in 2020. 5-6 years ago, when the dollar had initial pressure, had a pause, and then started back down, and that's when we saw gold start to give up some ground. So we've got some, other than the 200-day average, which I think would be an extreme for the correction in gold. We've got other technicals that we're looking at, and we have charts that we're presenting for clients. And those ones, I would suggest that, and we have been suggesting this correction would have to run its course. We're getting close now to indicators that would suggest that a bottom could be in place pretty quickly. But we want to have patience and wait for the setups to happen.
What's going on with the U.S. and Canadian dollars?
U.S. dollar had a small bounce back to its 20-day moving average. That was at the beginning of this week, then had an outside reversal today to the downside, and we're now at new lows for the move. So this is new lows for like the last 3 or 4 years. Clearly, a market trend that is in motion. And each rally has been subsequently lower highs ever since that end of April, 1st of May. So at this point, 98 looks like a pretty key resistance, and we're sitting around the 97 level as of now. Trend is down, so don't fight it until you see a decent reversal here. The Canadian dollar corrected with the action that we saw in the oil market. It had a little blip on the upside, with oil, gave it back. And right now, one of the things that we'll be looking for, and it's not quite in place right now, will be a divergence in in any strength that we see here, how it holds up relative to the oil market and relative to the commodity indices. So nothing clear standing out right now, not like we saw at the bottom back in April when there was just a great divergence in after April and going into March. But right now, no guidance from that point of view, so we'll just sit back and wait for things to develop.
What's going on in the uranium market?
Well, we have had this exceptional move there. Percentage-wise, I think it's better than what we've seen in most of the equity markets. You take a look at something like Cameco or the Sprott URJ and the URGs. There's been some great moves. Cameco's gone from U.S. dollar-wise from 36 up to 75. So just a huge move here. And at this point, we've got some daily and weekly signals coming into place right at the end of this week, suggesting that a correction is probably right around the corner, and would be expecting to see it come back and maybe as much as testing the highs that we had seen back in December. So if you've missed the parade on the energies, hopefully you'll get a secondary chance here within the next few weeks. And anything that gets back into the low 60s on Cameco will probably be worth establishing a position.
Ross, thank you so much for the update.
Nice to be with you, Jim.
My guest has been Ross Clark from ChartsandMarkets.com. Find him on X at ChartsByRoss. Coming up, Josef Schachter, next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Josef Schachter, founder of the Schachter.Energy Report online at Schachter.EnergyReport.ca. He's speaking to us from my hometown of Calgary. The Schachter.Energy Report, it's spelled SCHACHTER, Energy Report. Josef, welcome back to This Week in Money.
My pleasure. Good to be with you again, Jim.
Can you tell us how things are at the Schachter.Energy Report and how our listeners can subscribe?
Okay, we're very busy. We're just putting together our last report covering 10 more companies. We cover 37 in total of their Q1 2025 results. So that's going to be out to clients next week, Thursday. We also cover, of course, the macro side, what's going on with oil. 1 minute we're, 77 during the war, now we're 65. The war premium has disappeared. And what the supply and demand looks like and why we think there might be a little bit more of a dip below 60 in the near term. But by the fourth quarter, we're looking for $70, $75 oil and $80 in 2026. And because we see global demand picking up, this trade issue will be resolved. And we're looking at very little production growth, non-OECD, because of the low prices. So there's a bullish story. So if people are interested, they can just go to www.Schachter, Schachter, energyreport.ca, and they can find there, that we have an annual subscription, a quarterly subscription, and also we have something called Ion Energy, which is our macro piece. So for those who are just interested in the macro, there's that. And for those who also want the macro and the coverage of the 37 companies, and we cover companies as big as, Encana and, Enbridge, I was wrong, TC Energy, all the way down to companies that are, 2,000 BOEs a day, like a Southern Energy, which is in Mississippi. So we cover a lot of companies, and there's some fabulous yields there for companies where they're focused on, keeping their debt down and paying a return to shareholders. Some focus on NCIB, some focus on dividends, some focus on both. But you can get a lot of companies out there with 8 or 9 or 10% dividend yields right now. So for investors looking for income and capital gains, the natural gas stocks to me are cheaper right now than the oil stocks, and because the oil stocks had a good run with the price because of the war premium. And I also think the energy service stocks are cheap because, again, drilling is slow, but I think it's going to pick up in 2026. And then there's some decent yields on some of the royalty trusts. For example, a freehold royalty, is paying a 9-cent a month dividend. It's, as of the quote I've got, 8.5% dividend yield. So you get a monthly dividend and you get some capital gain potential. For investors, that's pretty decent.
You have an energy conference coming up in Calgary, October 18th. Can you tell us about it?
Sure. Once a year, we have an energy conference where we have 45 companies potentially this year. We had 40 last year. We do it at Mount Royal University in Calgary on Saturday, October 18th. For people who are subscribers, they get complimentary tickets included. And what we do is we have the opening session usually is one of our sponsors, and then we have somebody from the political side. 2 years ago, we had the Premier, Daniel Smith. Last year, we had our Energy Minister, Brian Jean. We're out now looking and talking to a number of people to be the opening speaker. Then I do a macro presentation of where we see things going this year, next year, and into the end of the decade. And then I talk about all the companies that are there so that people can make a decision where they want to go. We have 9 sessions running during the day, 9 rooms running, and there's 5 presentation slots. So a lot of people own like 2 or 3 energy stocks. So if it's one of the companies that's there, they can go and see them. If it's a company that, that they're interested, that's another option. And if they're just walking around and not sure where to go, our ambassadors will direct them. But the one thing that's really important is we have we have sessions during the day where the company executives are at the booths. So you have a chance, in the case of Tourmaline, to sit down and meet with a Mike Rose, the CEO there, Birchcliff, the Chris Carlson, the CEO. Many of the companies have their senior management there. And for individual investors where there's no FaceTime anymore at AGMs, being able to come one day and meet a lot of the companies' management of ones they own, both domestic producers, international producers, service industry, royalty trusts. We have a nice mix of companies from very large to micro caps, and people can get a chance to have FaceTime and hear their presentation. So it's a pretty useful day for people who are invested in names in the energy sector, and they can just go to our website and We have some complimentary old copies of our research, so you can see what kind of companies we do cover. And you and I talk about a lot of them during our interviews every month.
If President Trump is successful in stopping wars, will crude have to rely on supply and demand to move prices higher instead of the war premium?
Yeah, as you know, we had a war premium this time, $77, $78. We're now, $65. Before the war, we were down as low as $56 in early April. We're now, somewhere around, 65 and a half today. I think we're going to go back a little bit below 60 in the coming weeks, simply because, we're going to see a supply being greater than demand in the near term. Summer, during parts of the summer, we'll see more demand than supply. Then you have the shoulder season, which of course is September, October into November. So that's when you see inventory build. And that's why I think prices will back off, 56 to 58 range maybe. And then you go into the winter of 2025, 26, demand will be greater than supply. And that's when I think you start seeing those $70, $80 prices. And it's all the supply and demand with none of this geopolitical war premium issues that have taken the price up recently. And then, of course, we reversed very quickly. We went up, $14, $15 quickly and reversed that pretty quickly, too. The 12-day war, and then 3-4 days later, the premium's gone. So I think people should be looking to use any weakness, below 60 to add to favorite names, because I think between now and, let's say, Q1 of next year, there's a lot of stocks, in our view, that could have 50% or more moves, given how poor the energy sector has done and how cheap the stocks are at 2 to 3 times cash flow, big discounts to NAV. And a lot of companies are doing M&A simply because they want to get bigger in the Montney and the Duvernay, because they know that the long-term potential of LNG off the West Coast, and we got the first shipment that happened, I think, just in the recent days. So LNG Canada's up and running. That's going to be a BCF a day, heading to 2 BCF by the end of the year. And then if they approve, LNG Canada approves phase train 2, then, by 2028, 29, that will be, 4 BCF plus all the other projects that are going forward. The industry produces about 18.5 BCF a day. So if you add 5, 6, 7 BCF, depending upon what happens between now and the end of the decade, that's a massive growth rate for the industry. And right now, the industry is not spending enough money to replace decline rates in the natural gas sector. The oil sector has had growth simply because of the Trans Mountain expansion, where the heavy oil industry, the SAGD industry, has increased production to meet the demands of that pipeline, which the former energy minister said it was 40% full. I bet you it's in the 80s now, and within a year or two, we're going to be going back to rail because that pipeline will be full. And the management of TMX are already talking about tweaks and things they can do to increase throughput, more compression, other things that they can do to improve the ability to move more. And again, long term, the Canadian government would like to sell it. They're going to have to take big losses because they overspent to build it. But at some point, they want the First Nations to have an economically viable piece of it, which means, they're going to have to write down the spending to attract capital to privatize it.
Does President Trump have challenges ahead during his second 100 days?
Every day, you got a couple issues. Number one, of course, the big, beautiful bill, which is going to add to the deficit. They're talking about some cuts, but the reality is that tax cut they're giving is mostly to the wealthy, and it hurts low-income people under $70,000 a year. So, my back gets up on it by, that he's talking about it helping the lower and middle class. It doesn't really help the lower income people. And then there's issues now with the tax for tips and, no tax on Social Security. And of course, the Senate is trying to do it their way, and of course they then have to agree with the House, and the president wants it on his desk by July 4th. Not happening. We know how far July 4th is from where we are now. So the amount of work that has to still go in, and then a deal between the House and the Senate to get the similar bill to put on his desk, I don't see happening. I think you're looking at August, maybe even September. So it's a latecomer. And then the other issue you've got is the trade issue. He wanted to have deals done by early July. I don't think that's going to happen. So I think we're looking at trouble there. And then you've got this issue of him, taking swats at Jerome Powell, the Federal Reserve Chairman. And now he's talking, maybe he's going to appoint somebody to be his replacement while he's still in office. So you've got a lot of challenges. And then, the China issue with Philippines, with their Navy going after the Philippines area. You've got, North Korea using new weapons and new ships there. The Middle East, Iran is saying they were victorious and they won. And the question is, did they get any of the nuclear material out before the attack on those facilities? Did they really destroy the facilities so they can't be used? There's so many geopolitical spots, and Hamas is still out there. There's whatever it is. And then of course Russia and Ukraine. So the geopolitical side is there. Trump's still got a lot on his plate. He's calling a victory on the thing with Iran. If Iran and Israel hold to the ceasefire, that'll be good. But to get a nuclear agreement where Iran agrees not to have any nuclear facilities in country, but buy uranium for peaceful purposes from other people, as most countries do, and then also stop their support of terrorism. You may have seen an announcement this week from the FBI that they arrested a number of terrorist cells in the United States that were Iranian sleeper cells. So, while Iran may not have the military capability to take on the U.S., the Great Satan, or Israel, the small Satan, they do have the ability to use their terrorist proxies. And right now, the concern has been the sleeper cells, and the FBI grabbing one of them, shows how serious this is.
For his efforts in stopping wars, should President Trump get a Nobel Peace Prize?
Let's see him stop a war. Russia, Ukraine is still going. A ceasefire in Iran is not sufficient enough. It's got to be more. I think at some point in his presidency, remember, he's still got 3+ years. There's still going to be a lot of trouble with, China and Taiwan. So, if he's able to get one of those really signed and sealed and working, then I think that he should be nominated. Obama got one, for what he did in Iran, but that didn't hold.
Both the WTI and Brent crude dropped over $10 a barrel on Monday. Are there other examples of oil dropping over $10 in one day?
Well, you've seen, every time there's a geopolitical event that ends. So, for example, after Saddam Hussein went into Kuwait, the price of oil went up sharply. But when the Americans and the United Front that they put together to push them out, you did see big declines in percentage terms, not the dollar terms like we have today, but the percentage term was bigger. And we've seen that other times as well, when there's been political events. And then the price, you could say after the Shah was deposed, the price of oil spiked up sharply. And then, of course, it came down during the early 80s recession. But we're talking smaller dollar numbers at the time, but percentages was bigger than the percent decline we saw on Monday.
What do you see ahead for the price of crude?
Well, for the near term, I think we're looking in a band between, let's say, 56 and 68 or so between now and September, October. Then I think you start moving into the 70s as we get into winter demand. And then next year, I think we may see between $75 and $85 a barrel. But I think before the end of the decade, we're going to be north of 100 because the industry is not spending enough to grow production materially, and demand's going to grow by anywhere between 800 and 1.5 million, depending upon how strong the economy is. This year, maybe 1.2 million of growth, and maybe next year 1.1, 1.3. So if we get this trade issue resolved, then we're going to see more demand, and I think that's going to be helpful to the positive story that I see for both the crude oil and the natural gas industry going forward.
Is the U.S. likely to remain the biggest buyer of Canadian oil?
Yeah, remember, the United States consumes about 21 million barrels a day, but the oil that they produce in the Permian and in the other area basins in the U.S. is more lighter oil. So the U.S. needs our heavy crude because the refineries in the Midwest and the Gulf Coast use heavy crude. So just for example, last week, the U.S. imported 3.17 million barrels a day from Canada. That was 59.9% of their imports, but that was down from 3.89 a year ago, so down 18.6%. And that's because we're shipping more oil west into the Trans Mountain and heading Asia buyers, China, India are being buyers. The second biggest exporter into the States was Mexico, 397,000 BOEs a day, and then Saudi Arabia, 346 was being shipped there. So Canada just stands out as being so important because our heavy oil is needed in those key refineries. And with Venezuela now not able to sell to the U.S., they're going to need more of the Canadian crude at some point. If not, they'll be trying to see if Mexico can ship them some more, or if they can bring it in from other countries that have heavy crude that can go into those refineries.
What's the latest on rig data?
Well, the rig data has been just as proof that the industry is being very disciplined. The rig count this year or last week was 554 rigs working in the States, down from 588 the year before, down 5.8%. And so the mix of it is the gas rig count, interesting, is up because of LNG exports. They had 98 working a year ago. Last week, 111. And then in terms of oil, down 9.7%. They were working 485 last year, but 438 this year. And again, that's the lower oil price not providing enough return. The offset to that is the rigs are more functional, can drill longer distance, and have higher productivity. So when you look at the U.S. data for production, the U.S. is not seeing a decline in production at all. If you look at the numbers from last week, I'm just going to pull them out. The U.S. produced 13.44 million barrels of crude oil. That's up 235,000 from a year ago. You add on top of that natural gas liquids and renewable fuels, that's 9.6 million. So the U.S. was producing, about 22 million barrels a day, and consumption in the States was only 20.5. So the U.S. is a net exporter. So they exported last week 4.27 million barrels because they have a lot of this light oil that they can't refine, and other countries are very happy to buy it because their refineries are not as sophisticated, so they're prepared to pay a premium for the light oil. And, of course, the American refineries like to buy the heavy oil, which is cheaper, and they've got the facilities to crack it and make the products that we want.
Are you bullish or bearish on the Canadian dollar?
Ooh, that's a good one. If we have prices back off here below 60, we might go back and peak below 70 cents again. But if I'm right that we're going to see $75, $85 oil in 2026, we have a chance of being 75 to 78 cents. And if we go over 100, if the government of Canada is being pro-industry and pro-growth, we could see a Canadian dollar north of 80 cents. So from the point of view of investors, a strengthening Canadian dollar will make it easier for us to travel and go places, and maybe some of the imported goods will come down in price. But at this point, I think people should be looking for weakness. But longer term, I think it's going to be a positive story for the Canadian dollar, assuming the federal government does what it says it's thinking of doing, put some action behind those words.
The U.S. dollar's been pulling back. What are your thoughts on the greenback?
Yeah, the U.S. dollar's been pulling back because of interest rates have come down because of the issue here of the softness in the economy. Consumer side of the economy is a little bit soft. But the U.S. dollar, if you remember at the beginning of the year, was around 110. Yesterday it was 97. So it's come down quite a bit. But it's not near the lows of 2021 when the index was below 90. So, can it go down to 94, 95 if there's a problem with the budget bill, if foreigners, decide that, they don't want to own U.S. or they sell? Like right now, Japan is the biggest owner of U.S. debt securities from the U.S. Treasury. After that is China. Well, China's not really happy with America right now. If they sell, and also if you see, Japan sell more because of all their internal problems, that would probably, they take their capital out, and that would weaken the dollar. Over time, I think it'll weaken the dollar. So, we could have a weaker dollar while all of this tariff battle is on, and also, anybody wanting to get out of the U.S. investment areas, because if you bought assets at 110 and the U.S. dollar is now 97, you lost a lot of money. Even if the stock price went up, you probably lost more than you gained. So that's not a good thing for international investors if they are fearing more trouble in the U.S. domestic economy. $1 trillion a year of the government revenue just goes for interest payments, and a lot of debt comes maturing this year, and it might have been financed at 1 or 2%. Now it's going to have to be financed at 4%. That just makes the amount of money that has to be paid in interest payments up. It could be 1.1, 1.2. Well, that's over 20% of the U.S. Revenue. That's not good and healthy for the U.S. financial system.
Hopefully we've seen the end of the 12-day war. Is there good news and bad news from the 12-day war?
Well, if they did destroy the nuclear weapons capability of Iran, that removes a fear to the world that Iran, if they were so desired to cause more mayhem, they could have given one of those weapons to some of their terrorist proxies. And if one of them had taken what they call a suitcase bomb and taken it into an American military base in Syria or Iraq, or you were able to sneak it into Israel and explode it, that could have been harmful, of course. And of course, the question of the radiation would be a big issue. So I think that we need to know more. The U.S. intelligence community is showing more and more that they think they got it all. Those trucks that everybody saw there, they were saying now that those were employees coming to put the cement covering so that they could protect, the sites. Again, we don't know. You listen to CNN or MSNBC, you get the bad story. If you listen to, Fox or some of these other, social media networks, they're saying that the Americans got them, and we don't have to worry about it anymore. The key thing is, if the Ayatollah is ill, the supreme leader Ayatollah is ill, who takes over after them, and do they take a more conciliatory attitude towards the great Satan, and decide to, they want better relations, and they want to help their economy and help they have very high unemployment, a very weak economy. So if they decide that it's better to resolve those things favorably for everybody, you could remove Iran from being a bad actor. That would be, of course, very good for the world.
Is the available supply of rare earths a concern?
Oh, yeah. Right now, China's got a stranglehold. The U.S. government is trying to support industries from copper to lithium. We're seeing countries all around the world trying to do the same thing to get more of it, but it takes time. Putting mines into production takes time. And, of course, we have a federal government here that, has to make some decisions about how quickly they're going to approve them. the environmental situation, First Nation situation. So even if they fast track and say we're going to get it done in 2 years, I'm skeptical. Everything's taken decades. We were talking about LNG on the west coast of Canada 15, 20 years ago, if you remember, Jim. And we only now got the first shipment.
Do we have to put more effort into that?
Oh, for sure. Look, it requires a buy-in from everybody. Number one, the industry has to see that it's economic, which LNG prices of $12, $13 in Asia and lower and shorter travel to get to Japan or South Korea or China to deliver the product. That's favorable for Canada. The cost of putting these facilities in is very, very expensive, as we saw with the Coastal Gas Pipeline, how it ran way over budget, Trans Mountain way over budget. And so the question is, will these other projects come in at budget, and is the budget reasonable? There's an opportunity, but there's also a risk, and we need everybody buying in. So it's got to be, environmentally as good as we can make it, so that people can say that we have the cleanest LNG being shipped to Asia. And of course, if they stop using coal, the planet wins. Then you need the buy-in of the local communities. As we had the issues with Burnaby with all of the tanker traffic, and of course the Alberta and BC governments and the industry would like to see the tanker traffic issue for northern BC opened up so that it's not as strenuous as it is, which makes it harder to build any capacity up there and have more product being moved through northern BC, through the Kitimat area. So that's an issue. And then, of course, First Nations, and then the construction schedule. You need to do it in an orderly fashion so that you have the workers able to go from one project to another, and you don't really push up the inflation by having too many projects compete at the same time, and with not enough workers and prices going through the roof, nothing makes sense economically.
We're seeing more and more electric vehicles in the Vancouver area, a lot of Teslas, other brands as well. Prime Minister Carney says no more ICE vehicle sales as of 2035. Is the growth of EVs likely to continue?
Well, it's going to continue. I think right now when you look at where the growth is, Europe is pushing it more, and BYD and a lot of the Chinese manufacturers are taking market share away from Tesla because of their better pricing and a product that people prefer over Teslas. And so Tesla also has to upgrade their lineup. They haven't really done that yet, so people want to see new types of vehicles, longer batteries. Right now there's the big thing for Tesla was robo-taxis in Austin. And the stock ran on that. But the key thing is, winter is a problem for batteries. We need to find, and lithium, as you know, with the fires, as we saw in California, handling the batteries becomes toxic problem. So, there's got to be some solutions for the battery life, battery capability in winter, and length of a charge and the speed of a charge. So we don't have enough charging stations, in Canada or the States, more so in the southern part of the U.S., but not in the northern part. Canada doesn't have a lot. And then you put one in your home, you got to charge overnight. That's going to be a big drain on the electric grid in the provinces. So, if they're talking about, we want data centers and we want to have more manufacturing and we want more EVs, the grid can't handle it. And so we've got to spend a lot of money building out the grid, be it renewables, be it solar or wind, or it's going to have to be LNG-fired gas utilities. So even in Alberta right now we have a surplus, but a year or two, if you put in enough of these data centers, we won't. And of course that means the home price for individuals for their home is going to go up sharply. That's not going to be very popular.
Do you think stock markets could continue to climb a wall of worry?
Well, I don't think the market's thinking worry. I think it's greed. You look at the stocks that have been moving in the last couple of weeks. It's the technology, it's the AI stocks. They're all running crazy. You've seen, the NVIDIA go to a record new high. You've seen real moves in a very small group of stocks. Greed is back. I think that's a problem. It's a very narrow market. I think if there was some black swan, whatever that becomes, military, economic, trade, or whatever, we could see a 15-20% decline in the general averages in the U.S. because it's more technologically, the technology stocks in the S&P and the composite. But in Canada, it might be a 10% decline given our heavy weighting in finance and utilities. So I think there's sometime between now and year end, I think there's going to be a swat from something that's going to knock stocks down. But from the long-term perspective, I would be using that decline, to be a buyer, because I think going into the end of the decade, there's going to be a lot of upside in the market. But right now, I think we're in the 18th hole of a golf course, and there's not much left to play. And we're in nosebleed territory on valuations on a lot of these tech stocks. And I think people who own them and own them on leverage are going to end up being very, very unhappy and get hurt severely.
If real estate markets turn bearish and new building drops, does demand for crude, natural gas, gasoline, and diesel decrease not just here but all over the world?
Well, if you don't have more housing, then of course you're not going to be using as much, people won't be traveling, and of course a lot of the new homes go further and further from city centers. So you're using more, gasoline when you drive, and then if you look at the home, whatever the power you're using in the home, that requires more power, and electricity and natural gas fired stoves and things like that, and air conditioning. So if there's going to be a housing slump of any severity, it's going to slow down the increase in the demand for it. But I don't think it's going to be that much because, you look at net migration into Canada. Alberta's got pretty strong migration in. And if we are right that we're going to see more increase in business and in industry and, new projects come on stream with the support of this 2-year deal that the Feds came up with, that's going to be a big user of more energy going forward, which is a positive for the energy story, be it renewables or be it oil, be it natural gas, be it hydro in Ontario and Quebec, be it nuclear, which is Ontario. So you've got and hydro would be Newfoundland, Labrador, and Quebec. So you've got a lot of positives out there. It's a question of how quickly it comes to bear, and does the federal government come through with what they're talking? Do they walk the walk and not just talk the talk? And then the other issue, of course, is the tariff issue. Can we get back to a rational deal with the U.S. that's not far from the USMCA deal?
What's the latest on Alberta's push to leave Canada?
Well, there's you hear stories of 20-30% of the population are thinking about it and would like to have a vote. But right now, with what's going on between the premiers, breaking down the barriers between provinces, what the feds are saying, I don't think that the separatist movement has got any traction right now. I think if there was any problems with the federal government coming through with their promises and they don't deliver, and they penalize the resource industry of Alberta and Saskatchewan, that's going to be when the voices of those who are in favor of separation and in favor of a separation vote, and a simple, clean one, not like the one they did in Quebec, that could pick up. But I think that's a 2026 issue. I don't think it rears its head this year. You've got to give time for the federal government to either, come through or screw it up, and then the those opposed will have the evidence that they need to attract more supporters.
What do you think of the federal government giving BC $1 billion so it can buy 4 ferries from the Chinese government?
Well, it's a kind of two-faced thing. They're attacking the BC government for sending contracts, and they provide them the financing to do it. So it's like one side of one minister says one thing, another minister does another thing, and the government gives the political thing that makes it sound all good for the print and the TV media, but the bottom line is behind the doors they're doing other stuff. So this is the typical cynical stuff that most of us view government, and that they'll tell you what you want to hear. Just like this thing in the new potential mayor in New York, he got in over the others because he said, "I'll give you everything for free. We're going to have our own stores. We're not going to have a profit. We're going to cap rent. We're going to give you free bus rides and subway rides. Like, who's paying for that? The young who want, and people who would like to get everything for free and don't think about that there's nothing for free on that stuff. Somebody has to pay for it. It doesn't make any damn sense. And to me, governments, sprout things, and then you got to look at the evidence and say, well, did they walk the walk? And a lot of times they don't.
Should we be on the lookout for a black swan event this summer?
I think we should. I don't think Iran has gone away. Something could happen with a sleeper cell, or maybe they did get some material out. But the direct military confrontation, Israel destroyed a lot of their ballistic missiles and cruise missiles, and Iran is not getting help from Russia. They were helping Russia, and they're not getting help from China. So I don't think they have the military capability for a direct assault on Israel. But I'd be watching China's Navy. There's a lot of things you watch at night on BBC where they're confronting the Philippines over islands that are close to the Philippines that China says that's part of Greater China. You're seeing more and more flights and Navy stuff around Taiwan. You could see, some people have talked about that there could be, where China, puts, naval presence all around, around Taiwan, like the Americans did with Cuba, that could be something to be worried about. And then Russia's talking about potentially a new offensive in Ukraine. So there's a lot of problems out there. And then what if the trade war, or the trade thing doesn't come through, and Trump decides, oops, we're going to put in unilaterally massive amounts of tariffs, and that just throws the global economy a wrench into the global economy growth story. So there's a lot of black swans out there. Which one comes to the fore? But I think we could see one of them kick in before the end of this year, and that would be the thing that I talked about earlier. But I think it would hit the general stock market, which is overvalued, and there's a lot of greed out there. You look at the measurements like CNN, fear and greed. You got a lot of greed in that index, and if you remember in April, we had a lot of fear. So I think we could see a swing that happens fairly quickly. If something hits the market, remember, markets don't like uncertainty. So right now they're thinking everything's okay. There's no war. There's no, there's a potential ceasefire that could go into a peace deal between Israel and Iran and the U.S. But out of the blue, something could happen, and if the market hadn't expected, that's where the 2x4 hits, and that's where markets get hit very quickly. And look, we've seen 500-point up days, we've seen 1,000-point up days, we've seen 1,000-point down days. So the volatility is there. What do we have? 400 points on Thursday. So if people are looking at the market, I would say look for more volatility, look for bigger point moves. They won't be big percentage moves like we saw in '87 or other periods like 2020. But if you look at it in a point, given how high the point structure is now, where we are in where the Dow is and where the Nasdaq is, S&P at new highs, could you have 200-point down days in the S&P? Could you have 1,500, 2,000 points down on the Dow. I wouldn't be surprised if that happened before now in year end.
Do you see opportunities for Canadian companies with Canada pledging to increase its spending on NATO up to 5% of GDP?
Well, the Canadian industry, we do have things like CAE with simulators, which, could do very well. We do have to decide, are we buying the F-35 or are we not? Will some of it be manufactured in Canada or not? Are we going to see, Canada, buy more helicopters, of course, because we need them, or more drones for the border protection and the Arctic protection? So, we also need to be able to entice enough young people to want to go into the military. The U.S. somehow under Trump has been able to get the military targets and quotas that they've wanted way ahead of schedule. You've heard it from the Army, you've heard it from the Navy, Air Force. They've all said that they've had fabulous recruiting success. So, if we can do that in Canada, with the job market as strong as it is, there's a lot of opportunity for young people to go to get a trade and make a six-figure income after they get, fully accredited. So, if you want to be a welder, if you want to be an electrician, a plumber, there's six-figure incomes out there. Is the military an attractive alternative? And is it better than going to, university and getting an arts degree, which, do you have a job at the end of it?
How can our listeners subscribe to the Schachter Report?
Yeah, it would be great for people to just go to our website, www.Schachter.Energy.ca. There's complimentary copies that you can take a look at there of our older research. And we have an annual, a quarterly subscription for the company-based research. So what I would recommend is take the quarterly, try it, see how you like it over the 3 months, and then the economic thing then would be to switch to the annual. And the Ion Energy is complimentary right now until September, and then it's on Substack now. So people sign up, through Substack, and starting in September, they'll have to decide if they want to have it as on a regular basis. And then we charge $30 a month for that, or $250 annually. So again, the annual is a better deal once you're comfortable with the product. So right now you can get it for free. See what our macro stuff is, as we've been talking today between us, Jim. And if you like what you hear and you want to know more and all the work that we put into it, it's a very economic price point. And Substack has become a really a great way for people to put out product and at a low cost for consumers in most cases to get access to great material. So we've been talking to people about going on Substack for a while, and now we have our Ion Energy on Substack. For people who are subscribers to our paid product, they get it directly from us.
Joseph, thank you so much for being on This Week in Money.
My pleasure, Jim. Always a pleasure.
My guest has been Josef Schachter, founder of the Schachter.Energy Report online at Schachter.Energy.ca. He was speaking to us from Calgary. Coming up, Sean Brodrick, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Sean Brodrick, Senior Advisor at WeissRatings.com. He's speaking to us from Florida. Sean, welcome back to This Week in Money.
Thanks very much for having me on.
Sean, can you tell us a bit about your newsletters and how our listeners can subscribe?
Sure. Well, you can find everything I write at WeissRatings.com, or as you would say in Canada, WeissRatings.com.
Really?
Yeah, well, I hear that from a lot of Canadians. That's all I can say.
Yeah, I think it's because Weiss is it's a Mennonite name.
Oh, is that it?
Yes.
Oh. Maybe I know a lot of Canadian Mennonites and I don't know it. Anyway, my monthly newsletter is Wealth Megatrends, and we're talking about gold in that a lot. And I have two premium service newsletters as well. I have Resource Trader, which, as you can also figure, is into gold, but it's also into things like rare earths and agriculture and just a whole bunch of other things that are kind of resource focused. And then I have Supercycle Investor, and that does have a few gold positions, though it also has it's like where I can focus on the new tech supercycle. We're in a tech supercycle now. It's being led by AI and stuff. So there's also a great cycle coming together in like a defense stocks as well. There's a thing called the war cycle. I explained that to my subscribers, and there are actually 3 war cycles. I don't want to get too complicated, but they're converging now. This is one of the geoeconomic things that has happened over and over and over again. And right now they are really starting to pick up steam. And so we have things like the European Union pretty much surprising everybody by raising their defense spending to 5% of GDP. These were people who couldn't get to 2% of GDP not too long ago. So we are seeing tremendous increases in defense spending all around the world. Mm-hmm. And within that, I like drones and hypersonics. I've been recommending those to my subscribers, whereas with the rest of the tech stuff, we're into, AI and also, AI infrastructure, that kind of thing. So there's a bunch of different newsletters I have. It all depends on what you're actually looking for. And along with all that, I have a free e-zine that comes out every Wednesday. That's Voice Ratings Daily. So you can read that for free and see the kind of things I talk about.
Now, Canada has agreed to raise its defense spending to 5% of GDP as well.
Yeah, I know. I mean, good for you guys. And I wouldn't blame anyone in Canada or in Europe for spending as much of it as they can on like homegrown stuff. I should say homemade stuff. I mean, just because that's an economic boost, and you guys are really tech savvy. I'm sure you'll turn out some fine equipment.
Now, taking a look at the gold market, it's had a significant move from $1,600 and change in late 2022 to doubling to $3,500 in April of this year. Where are we going to from here for gold?
Well, last year I gave, because of stuff that was going on, I gave my subscribers a longer-term target on gold of $6,900. And we seem to be moving along there. I expect the next big rally could bring us up to 4,000 or so. According to, and this is cycle work. So we will probably go up to around 4,100. Everyone thinks, oh my God, we missed this rally. Let's get in. That's when gold pulls back. We'll have a nice pullback once we get over 4,000. And that is going to be a next pullback worth buying. But since it's under 4,000 right now, you can buy whenever you feel like. I have a bunch of positions for subscribers. I own a bunch myself as well. And I'm putting together yet another list, because what I've been doing is we started with larger stocks because those are the ones that actually responded first, and slowly we're moving down the scale, went into the junior miners and now developers and stuff like that. And I think there's plenty of great potential for people. There's lots of stocks. I mean, gold stocks were sold off so hard for so long that for a long time there wasn't any optimism in the sector now. And you can still find actual miners priced at like less than, pretty much less than just about anything. They are priced cheap. And these are producing mines. Some have trouble. You have to investigate anything you buy. That's why I think people subscribe to my newsletters is, they want me to do the investigating, which I'm fine doing. You can follow the management, look over what they're doing, seeing that kind of stuff. And so I think we're still in early innings in this. And this next run is just going to be tremendous. The fact of the matter is, gold bull markets, on average, at least double, and they sometimes go a lot higher than that. In other words, the price of gold actually doubles. And gold didn't break out until 2024. It has a long way to go. That is a long way to go, not only in price, but in time. So I think it could be quite an extraordinary opportunity.
With $3,500 an ounce gold, the miners have moved higher, but not explosively like what would be described as turkey flying season. What are your thoughts on the gold miners?
I like the gold miners a lot. Here's the thing. As you and I are talking, gold is up 26.5% so far this year. That's a very nice move. I mean, when you look at what's going on with the S&P 500 and stuff. Gold miners, though, I mean, the GDX, which is a big gold miner fund, that's up 54.5%. The GDXJ, which is the junior miners, is up 57%. Silver's up about 26.5%. Silver miners are up 51%. So you can see that the miners are doing their job because they are leveraged to the underlying metal. It's just we haven't had the real run yet. When the real run starts, I mean, you are going to see these things go ballistic. How do we know that? Because it's happened every single time before. That's why. I mean, it's not rocket science. It's just, this is what happens when a gold bull market really gets going. And we're at that stage where it can really happen. We have seen this, this happened this week. We saw President Trump openly talk about how he plans to replace Fed Chair Powell. Powell has fought Trump on cutting interest rates, rightly or wrongly. And you can find people on both sides of that thing. Rightly or wrongly, it's really been a thorn in Trump's side, so I see why he wants to replace Powell, but it's also supported the dollar, holding up rates as much as we have. I say this even as the dollar is down more than 10% for the year. It's in fact now down to the lowest level since February of 2022. But it can go a lot lower. I expect that as a new Fed chair materializes, and the only important feature of that new Fed chair for Trump will be that person's devotion to Donald Trump, and they will give him the rate cut he wants. And so as that becomes more crystallized in the market's mind, I expect the U.S. dollar to slide much lower. And since gold and the dollar tend to sit on opposite ends of the seesaw of pain, as the dollar goes down, gold should go higher. That's actually been one of my longer-term theses since last year anyway, was I was expecting the Fed to cut rates. They haven't cut as much as I thought, as fast as I thought, but more rate cuts are coming, and that should send the dollar lower and also send gold higher. That's not the only thing moving gold higher. There are plenty of good, positive, bullish things for it. So things look quite good overall for gold and miners.
The silver market has had a significant move from $17 and change in late 2022, more than doubling to over $37 an ounce this month. Where do you see silver going?
Well, as I said, silver's done quite well. Silver miners have done even better. I think we're at a very, very good place for silver because silver got above $35. Now, there are a lot of people that expected silver to very quickly rise from 35 to 50 without thinking about the fact that, everything zigzags. So once silver got that breakout, then it has to digest that breakout, and then it can start moving higher again. But I expect silver to play catch up with gold. The gold-silver ratio, as your listeners probably know, it's been out of whack for a while. I expect that to normalize, at least somewhat. And so what that means is higher silver prices relative to gold. There actually aren't a lot of silver stocks. I mean, primary silver stocks. And so that's also exciting because, there's a few companies you can buy, and those companies will probably be buying even smaller companies in order to stock up their resources and their production. And so there's just some extraordinary opportunity in that space. I think the silver space is one of my favorite places to be right now.
So what is happening with the silver miners?
Well, they've about doubled the performance of silver so far this year. Again, just like with the gold miners, I think they can go much, much higher, much, much faster. They are consolidating now. That's okay. Nothing moves in a straight line. Things zigzag. That just gives you a chance to buy the things that you wish you'd bought previously and also to add to current positions. So now, not every silver miner is a buy, and I try to emphasize that to my subscribers a lot. There are some we avoid. But, if you have a company that can control costs, is increasing its resources, is increasing its production, or at least has a path to increase production, that's a company that can do extraordinarily well in this market.
Do you think the defense stocks are predictors of what lies ahead for the world?
Oh, I expect more conflict. I expect chaos. And so defense stocks are going to become a mainstay in many portfolios when they weren't there before. And we are seeing new technology change the battlefield. Drones are part of it. We saw, I think, the defense minister of, I want to say Belgium, but it might be some other European country. He compared the invention of drones to the invention of gunpowder as to how it can change the battlefield. And if you've seen the videos from Ukraine, you've seen these things chase and terrorize people out on the battlefield. You've seen drones take on new tasks, new operations that you never thought drones could actually do. We've seen the Ukrainians use drones to give Russia a couple of Pearl Harbors, these sneak attacks that the Russians were not expecting at all, but actually took out some very important defense resources for them. So that's just one. The other is hypersonic missiles, which unfortunately the U.S. is late in the game in this. China and Russia already have hypersonic missiles. Those are missiles that travel faster than Mach 5, but they can go a lot faster. The Iranians, who are firing hypersonic missiles at Israel, they have hypersonic missiles that can go Mach 13. It can strike a target before radar can pick it up and react to it because it's going so freaking fast. And so then the Iron Dome, like Israel has, becomes more of a spaghetti colander. That's why you see all these missiles striking down in the heart of Tel Aviv. And I've been saying for quite some time that the Israelis could have allowed Iran to have either hypersonic missiles or nuclear weapons, but not both. They can't allow them to have both. And that's going to increase the chance of conflict in the Middle East. But it's not just the Middle East, is it? Ukraine, things seem to be heating up there. And over in Asia, while we've been obsessed with other stuff, China is quietly setting the stage for making a move on Taiwan. Now, the U.S. military and Taiwan both say drones will be a massive part of the defense of Taiwan if it comes down to it. And would the Chinese want to take the economic risk of attacking Taiwan? That's a question that's been on everyone's minds. But one thing we have to realize is the economy is not going well in China. And China may need a distraction for its population from the bad economy. And in that case, that moves the chances of an attack on Taiwan, that moves up the chances of that happening quite a bit. So, there's plenty of places where things could really spiral out of control. We can talk about India and Pakistan. We can talk about various spots in Africa. There's a lot of stuff going on. So I expect the war cycles to move toward a crescendo. It's not going to be immediate. This is over a few years. But yes, I expect a lot of conflict in the world ahead.
If President Trump is successful in ending wars, could crude oil and oil stocks end up focusing on supply and demand instead of a war premium?
Well, I think we saw the war premium come out with a whoosh when things de-escalated between Israel and Iran. I don't think we should really focus on whether he can end wars. I think we should focus on what the price and production situation is. Below a certain price, the OPEC oil states really can't make their budgets work. So it's in their interest to do whatever they need to do in order to get the price back up. Now, U.S. production in the shale oil fields is one thing that they've had a problem with, but a much bigger problem for them is overproduction by the members of OPEC Plus. That is, those nations that are allied with Russia that are also producing oil. Kazakhstan is one that cheats a lot and cheats enormously. I don't know what the Saudis might do about that, but they might try and find ways to put pressure on other nations to stop them from overproducing so much. So I believe that we'll see some support in the oil market. Anytime oil pulls back to around 60, that's when I look to add from a very small group of oil stocks that I currently own. We have one in, say, Resource Trader that's working out extremely well because it fits my criteria, which it's a list, but it's not too insane. But there aren't a lot of stocks like it, though. So while I am bullish on select oil stocks, it's only on the select ones. I think that for many stocks, it could be a hard time ahead. But for certain stocks, the oil business could do very well indeed.
Food supplies are a concern. Is this bullish for agriculture stocks?
Oh, it's bullish for the agriculture stocks we own. There's all sorts of reasons to be bullish on agriculture. Changing climate is one of them. Another is if you keep arresting your workforce. There's a lot of stuff to like about agriculture. One thing to keep in mind, though, is that agriculture is changing fast, much like the rest of American industry. We're going to see more robots in fields. We are going to see new strains of seeds and stuff. We've already had new strains of seeds, but they're working on some really gee whiz stuff right now. That's more drought resistant, stuff like that. So we'll see that stuff come into play as well. They have the new biologicals. They have a lot of stuff they're doing that's just really interesting. So we're going to see some cutting edge science in agriculture, and we're going to see some real opportunities as well. It's still going to be, I can't think of a year that doesn't go by without the farmers complaining about something, and rightly so. Things go wrong for farmers all the time. So it'll still be a scary space, but there's just going to be some real chances to make some real money as well.
Stock markets, Brazil versus the U.S. Your thoughts?
I like Brazil. Now, the U.S. is still the leading economy in the world, and we had a problem where a lot of money was rotating out of the U.S. That isn't a thing that happens all at once. For one thing, other markets simply aren't big enough to take all that capital. And so I think we're seeing some money come back to the U.S. now because as people have gotten less worried about a big impact from the tariffs, they're starting to see that the U.S. can still be a great place to work. That said, we'll probably see American exceptionalism wind down. It doesn't mean the end of it, but, the whole thing about America is the best performing market and the safest place to be, that's probably under some threat. And so we're going to see money rotate into other markets. Brazil is one of those markets. China's made all sorts of deals with it when the U.S. tariffs started going up. I expect that to continue. I expect Brazil to be a major supplier of all sorts of things, and it also has a nice little economy anyway. Latin America is a place where you can find some amazing deals if you look around. Now, they've had their problems in the past, which is why these things are deals. No one thinks that they're actually going to work out, and they'll just fall over their own feet like has happened in the past. On the other hand, sometimes things are cheap enough and the growth looks good enough that you can take a risk. And I think Brazil is one place people should be looking to put money to work.
Is artificial intelligence causing a new tech super cycle in stocks?
Yeah, it is. And, there's probably going to be a tech super cycle anyway, but certainly artificial intelligence is leading the way. And things related to artificial intelligence. Artificial intelligence, the processing power, uses so much juice, so much electricity that we have to build new power plants. However, one way to work around that is to make the same AI computations happen using a lot less electricity. So if you can find the companies that are doing that, that's a place that can do very, very well. I keep hearing that we are going to see much more AI used in things like insurance, which makes sense. You just need them to run a program once you have it done, and in banking and stuff like that. We're going to see a lot of job disruption. That won't be very good for a bunch of workers. I don't have a solution for them on that, but I do know that as an investor, you just can't ignore these opportunities. And the opportunities in AI are extraordinary. That said, I was on a stage not that long ago where a guy was extolling the virtues of ChatGPT and some other online chatbots, and I related my own experience with them, which is that they are the laziest, sloppiest research assistants in the world, because at some point they'll get bored or tired, or I don't know why, and they'll just start making stuff up. Now, if you're asking about a topic that you know a lot about, which I do, then that's okay. At some point you can say, oh, this isn't going to find out the right stuff. Because here's the funny thing. You can catch them at it and say, hey, you said this, it's wrong, and they kind of scurry away in their electronic realm, and they come back and say, okay, I've redone it, here it is, and you know what? It'll still be wrong. Only a different kind of wrong. So as much as the evangelists of AI like to extol their virtues, it has a long way to go. I mean, I use them for research, but I always check everything they come up with. It does save me some time when I'm trying to collect a bunch of data on a particular topic. It'll put all that really together. They might miss a point or two, but I mean, it's actually quite helpful that way. But you have to realize that AI has its limitations. And I think if you're aware of that and don't get caught up in the hype, you can do okay. And hype aside, the growth potential in AI is extraordinary because it's much cheaper to have a computer program do it than to have a person do it.
Are there positives and negatives to artificial intelligence?
Well, I think I just gave you them. I mean, that has been my own experience. Certainly it can save costs, but it is not perfect. It's not even close to perfect. I mean, gosh knows, I'm worried about these Tesla self-driving cars, how, that's going to work. We'll see. So, just be careful, for all the reasons I listed. But there are pros and cons, and you just have to be aware of them.
Do you think artificial intelligence will be able to trade stocks better than humans?
No, certainly a possibility. I mean, isn't that what the robo-traders they have now do, right? I mean, they have machines that make trades faster than any human can. And so by taking small slices, it actually works out. So, adding artificial intelligence, which would give you a trading strategy longer term, rather than 1 second to the next, that should work out. But, I mean, it has to prove itself. I know a guy who's having AI plan out a vacation for him. I'm interested to see how that works out for him because, maybe things will go well, and I certainly hope, or else maybe he'll overpay for something, which is also likely, or maybe he'll end up in some place he's not supposed to be. That would be hilarious. Not for that guy, he'd hate it, but, I would find it funny personally.
Yeah, welcome to the Pleasure Dome in Tehran. The U.S. the U.S. dollar's been pulling back since January of this year. Do you think President Trump wants a lower dollar?
He says he doesn't, but he does. And the reason that he wants it is because he wants to boost U.S. manufacturing. So, that makes perfectly good sense. Now, I don't know if he's doing this intentionally, but talking about a new Fed chair is definitely a way to get the dollar down. And there's other things. The constant changing of the tariffs. They're on, they're off, they're up, they're down. That thing gives people less confidence in an economy. People know that they can invest somewhere else maybe and have more surety of how things will actually work out there without the rules changing on them, from 1 week to the next. So I think that he will have a U.S. dollar whether he wants it or not, but he probably wants it.
Could we see volatility ahead in interest rates?
Oh, yeah. I mean, again, that's part of replacing Powell. Though the Fed was going to cut anyway. They've held off cutting. Powell said that he's held off cutting because he doesn't know the impact of the tariffs. And I can see his point. And especially because all the tariffs are supposed to go into effect on July 9th. That's not going to happen. They're going to push at least most of them out. Maybe they'll keep some as an example of if you keep ticking us off, this is what happens. But I think they'll push most of them out. It's hard to make longer-term plans in that kind of environment. But the trend is we are going to have lower interest rates. I think that inflation is pretty much under control. While there were some worries about the economy stagnating, and those still exist, there are parts of the economy that are not doing well. Overall, the economy is doing well. So if you look at that and then also we are seeing rising unemployment. Again, not at a big pace, but enough that it'll get to a point where the Fed will look at it and say, a rate cut might help that unemployment. And so there'll be reasons to cut rates, and then we have the threat from Trump to have a new Fed chair who would definitely cut rates. So for all those reasons, rates will be going down. But again, it could be a wild ride simply because of all the uncertainty in the market.
The latest stats released by the U.S. government show that the U.S. GDP contracted 0.5% in the first quarter. Is that a concern?
It's a concern, but you have to understand tariffs screwed everything up, right? And so we imported a lot because people wanted to get ahead of the tariffs. And so that was a problem in the first quarter. Maybe in the second quarter, they already bought everything that they wanted in the first quarter. And they already bought everything they wanted for the second quarter in the first quarter. And so then we'll see a big bump in GDP. I don't expect this to actually get sorted out until the end of the year, if then. The tariffs are just chaos. They are chaos in action, and they really screw things up. And so it all depends. I mean, the old saying goes, it's a recession when it's a recession when your neighbor loses his job. It's a depression when you lose your job. And I'm not saying we're headed for either recession or depression. What I'm saying is that the impact of the economy could be quite individualized. If you are affected by what's going on, if you're, say, a realtor, or if you sell cars for a living, things could be quite traumatic. On the other hand, if you're in a business that isn't particularly affected by interest rates, things could go absolutely fine for you. So we'll have to see how that works out.
Are rare earths becoming sought after commodities, and are rare earth stocks performing?
Well, mine are. Here's the thing. When we had the Weiss Rating Summit in Boca Raton not too long ago, one of my presentations was on rare earths and the real potential in there, because the Chinese are using rare earths to play hardball with the U.S. because they produce rare earths that we don't at the present time produce ourselves. The reason we don't is because the Chinese made a concerted effort to take over the industry, overproducing and underpricing until they drove Western firms out of business. Now, Western governments have realized that it's not a good place to be in. And so what they are doing is they're providing help in the form of financial help, or sometimes lowering regulations, that kind of thing, to get rare earths, not only production, but also refining and manufacturing of high-tech magnets and stuff. Get that done in the U.S. or in its allies. And so, at the time, I told people it would really depend on what happens with the tariffs, with China, with their reaction. China has eased up somewhat on the whole rare earths thing, but there are still some restrictions in place. And at the same time, I think that the government realizes that they have to support this industry. Well, when Uncle Sam is throwing money at something, you might want to invest in it. And rare earths definitely looks like something you can invest in. So that's actually working out quite well for us.
Does it look like lithium stocks have bottomed?
Well, it looks like something's going on. I mean, really, when you look at lithium stocks, and yes, I think you could make a case for a good positive thing there. And a lot of that has to do with EV production in other parts of the world, China and stuff like that. And at one time, the price of lithium got so low that we saw lithium projects shut down. And that's actually quite bullish for the rest of the industry. If you can survive the fact that other projects shut down, makes the stuff you produce more valuable. So I think people should be looking at lithium. If they don't own it already, maybe the time to buy is coming up. It's just going to be a huge thing going forward. The EV wave is not going away despite lack of U.S. support. We're about the only country in the world that isn't going to support it. And so, I think there's a lot of potential there as well.
Sean, what's going on with copper?
Well, copper, they call it Dr. Copper because it takes the temperature of the global economy, right? And sort of. And copper has been performing very well in the past week, as a matter of fact. There is a copper squeeze going on at the London Metal Exchange, and I don't know how much this is screwing things up. But looking at a chart of copper, I think it looks quite bullish. I really do. Now, maybe this is telling us that the world is getting over its fears about how the Trump tariffs will affect the global economy. That, to me, would be the obvious reason. But there can also be supply issues as well. If, like the old mines, they're just starting to wind down and stuff, and they don't have new mines in place, at the same time the copper demand just keeps going up and up and up, of course you're going to have prices squeeze higher. But copper could be a place where you could put some money to work.
Sean, where can our listeners follow you and subscribe to your newsletters?
Well, I think they should go to weissratings.com right now, and you will find my stuff there. And as I said, I have a free zine every week. I have a monthly newsletter, which is all full of great picks. That's good. And then I have two premium newsletters. One is focused on resources, and the other is on super cycles. But we are doing the tech super cycle and the war super cycle right now, and so those are both in play. It really is a fascinating time to be an investor. It can be harrowing, it can be scary, but you know what? That's often when you find the best profit opportunities out there, when other people are scared. You can find some really great returns, and because other people got scared off, you can buy it cheaper. So just don't chase anything. Try and buy things when they're cheap, and I think you can do very well in this market. And you can check out my stuff at weissratings.com.
Sean, thank you so much for being on This Week in Money.
Thanks for having me on.
My guest has been Sean Brodrick, senior editor at weissratings.com. He was speaking to us from Florida. And that wraps up our show this week. We'd like to thank our guests, Ross Clark, Josef Schachter, and Sean Brodrick. And thank you for listening. If you have any questions for the show or for our guests, you can send them to info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen.